We're going to The recording just started. I'll recap. A very, very warm welcome to tonight's panel. We're going to be talking about venture capital. As you know, it's something that's incredibly close to my heart because I actually happen to work in the industry myself too. And I named this night's session Investing into Businesses That Are Going to Change the World, because that is actually what venture capital is all about. We have some amazing speakers on the panel tonight. We have Aniela and Hugo. I'm going to let them introduce themselves in just a second. But just maybe before we jump into it, I'll quickly give you my own background. You might have seen it before. My name is Caroline Hultman. I'm a co-founder of GIN. But my day job, as I mentioned, also happens to be in venture capital investing. I work for an early stage venture capital fund called J12 Ventures. And we are early stage. We invest in something called pre-seed, which means that we're backing companies at the very, very earliest earliest stages of company formation. So it could be when there's pretty much just the team, no product, and just a big vision. So super exciting for me. The concept or kind of agenda for tonight. I'm sure a few of you might be familiar with venture capital investing, but before we dig into like how we all got into the industry and what we actually do, I just wanted to kick off with kind of a high-level discussion about what venture capital investing actually is and why it's very important to society. And then I'm going to ask Aniela and Hugo to walk through a little bit more like how they got into the industry, what their days look like, and things like that. And I also just wanted to encourage you guys, if you have any questions, as you know, there's a kind of chat function in Zoom, so you can pop in your questions there. If it makes sense, I'll incorporate them throughout the conversation, and otherwise I'll also save a little bit of time in the very end for Q&A. I'm going to hand over to Aniela to give your intro first and foremost.
Thank you, Caroline, and thank you very much for having me here today. I'm very excited for this panel session. So my name is Aniela Laville-Marquet. I work at AXA Venture Partners, where I'm a senior associate there. We invest in Series B and C throughout Europe and the US as well. We have offices in London, Paris, and New York. I'm myself based in Paris. I started my career in investment banking at Rothschild, where I did M&A, so merger and acquisition, ECM, everything, which is equity capital market, so everything related to IPOs, and DCM as well, debt capital market, everything related to financing of companies. After that, I founded my own company in the co-living sector for a few years. And I was missing a lot the analytical world and the variety of sectors I could see in the investment world. So I joined the best of both worlds and started in venture capital about a year and a half ago.
Amazing. Thank you so much, Aniela. As you'll hear, we have a representation of French people tonight. I'm going to hand over to you, Hugo.
Thank you, Karen. Well, I guess everyone would have guessed with my accent, but it's great to meet you all tonight. So I'm French, originally from Paris. I graduated in Paris, starting my career in banking, like Aniela. So I work for BNP Paribas. That I guess most of you will know. I started there as a junior trader, and then moved to London. 2 years after that, I've been in London for the past 6 years now. I joined the US bank, worked in structuring for debt product. And then I got involved in the VC industry by being an angel investor, meaning that as an individual, I started to invest in, in startups. Through the connection and the meetings, I've had with people, I decided to co-found, to found a company with one of my ex-colleagues, a company called Amrock Ventures, and we invest in very early stage company, mostly in the tech space, in the UK and also in the US.
Amazing. Thank you so much, both. And we're going to, as I said, dive deeper into some of the parts of what you just discussed, which is how you actually got to the role in a second. But before that, maybe we'll just start by kind of defining what venture capital is. Aniela, do you want to take the first punch at that?
Sure, happy to. So in simple words, I would say venture capital is basically money that is invested in startups that are trying to reshape markets and disrupt their own markets. It's a high risk, high return business, which differentiates from private equity. And it's extremely exciting on my point of view.
I completely agree. And you mentioned, and actually we both mentioned that kind of aspect of venture capital investments, kind of building the companies of tomorrow and companies that are really going to change the world. In what sense, why is that the focus of venture capital funds? And if you think about the types of themes that you're working on, is there anything in particular that you can kind of share with the audience? Any themes that you're working
on? Sure. So the way we see it, as I was saying, is reshaping the markets. Maybe I would mention Simundia, which is one of the portfolio companies we have. What they do is it's an online platform that accompanies employees in their coaching sessions. So it's I would say an impactful company, and that actually helps employees feeling better in their own companies.
For sure. Yeah, I think, and I'm sure we're going to come back to themes, but like health and wellness and sustainability in general are super big themes of venture capital investors. And I think we're all kind of just thinking about what companies could potentially be kind of the next billion-dollar humongous companies of the future. And those companies are just by nature obviously going to touch a lot of lives, but obviously also to be kind of sustainable and good businesses in the long term. They also have to be sustainable. I'm going to hand over this one to you, Hugo. Why do you think venture capital is important for society and innovation?
Yeah, it's a great question. Difficult to answer to that. I mean, as an industry, basically the VCs here, as Aniela said, to provide funding to very young company that would not have the ability to raise capital with large banks and large financial institutions. So the very first step when you're a very young company, for example, is that you can actually raise capital through individuals that you call angel investors or ultra high net worth individuals. And then, as you grow, then you have access to that larger part of the financial industry, so banks and other lenders. But I guess from a society standpoint, a lot of the projects, a lot of the companies can have a positive impact on societal changes. And I would think that's maybe the main point about specifically what venture capital can bring to the society. Obviously, depending on the industry, VC touches all the industry that you can imagine, from deep technology to going to space to sports to consumer retail. So I guess if each of those industry would have a different, each of those companies would have a different impact with regard to the society. But I guess from being a VC is very much, giving the possibility to those companies to just raise capital to try to grow. I think that's the main point from my point of view, at least.
Yeah, I completely agree with that. And I think you've mentioned something that's really important, which is access to capital when others don't want to provide it, which is very true, right? And you mentioned also that, venture capital is a high risk, high reward investment, which means that, obviously when a company is just starting out, there's so much uncertainty about the future. So traditional lenders, as you mentioned, or private equity firms that might come in later to the game, they're not even relevant. They wouldn't look at things like this. So I see it almost as like venture capitalists are in a way like the gatekeepers, and very much decide, because they kind of feed and nurture like the youngest pool of new companies that are then going to get elevated to the next stage of funding, which I think it's why it's so incredibly important to have a very diverse set of investors, because the types of businesses, types of founders that get backed is very much a direct result of the type of investors that back them. So yeah, exactly. I also see it as kind of like nurturing these small seeds that can then go on and be supported by others. And then I wanted to ask, and I think given we've kind of, just for the audience also to know, Hugo, obviously, as you mentioned, focus on slightly earlier investments, so pre-seed and seed, which is kind of, at the very early stages of development. And Aniela, you focus on Series A and Series B onwards, which is still pretty early in the grand scheme of things, but companies probably at that stage have a product, they have some traction with customers, there's some real things to look at. I wanted to ask both of you, what do you look for when you meet entrepreneurs? How do you assess an opportunity and a business?
So I would say three main things we look at. I would say first, market. We make sure the addressable market is big enough for the company to have potential to grow. If you're in a very small market, your company can still grow, but at some point you will reach a limit. So that's a very important one. And maybe specifically because we're in Series B, A, B, and C, so we're a bit at a later stage. So is there still potential to grow? Then also because we're at a later stage, we spend some time on financials. So I have a big part of analytical work, making sure the business model is healthy. How is the company growing? Do they have a sufficient gross margin? Meaning the costs in front of the revenues, are the costs not too important compared to the revenue they're making? What is their traction? How many clients do they have? What is the concentration? So it's a bit of lots of work analyzing everything, understanding it better. And then last but definitely not least, the team is a very important one, even though I'm at a later stage. I think that would be the number one thing I would look at when I invest in a startup for different reasons. One, because I want to invest in a company where I know this guy maybe brought the company to 30, 50 employees, but do they have the potential to take it to the next level and potentially to the IPO level? So that's one thing. And because the company is so young, you will see that in startups, everything depends on this one founder or the two co-founders. And then last, when we're investors, we're long-term investors. So you stay in the company for, I don't know, 5 years, seven years. So it's a partnership with the founders. It's in a way, it's a wedding, in the way I see it.
Yeah.
So you need to make sure you actually get along with this person and you have the same vision. You can understand each other's, tell each other's the truth, and be the best partner and coach for this journey.
For sure, I can certainly echo that, and I think I know what Hugo is going to say because we kind of play in the same part of the market. But I'm going to hand over the question to Hugo.
Yeah, actually, I think I'm going to steal a few points from Aniela. So I think large market size, what we call in our language the TAM, so total addressable market, which means how big could be the market, not even just looking specifically at the product and the company, but just how large could be the market in a grand scheme. I think that's very important. A product that is disruptive, that solve important problems. If we think about, for example, technology, it can be solving an infrastructure problem within a group of companies. So that's a key point. Obviously, when you look at is the product disruptive, will it change the current way of how things are being done? If you find it that it actually brings something new to the equation, then it might be a winner, right? Obviously, it depends about how the company grow, but if it's something that doesn't exist, I'll take the example of Airbnb. Right? When they started, that was you couldn't find any similar type of companies and products. So apart from the potential size of the market, you knew from the beginning that what they were doing, what was solving a big problem, right? I think management team, I also have to steal that from Aniela. I think high quality, resilient management team, very important, even more for me, very early stage. So, you know, rather than for us, I mean, we can focus on financials from our side at very early stage, but, you know, you're doing scenarios, you're very much trying to understand how wrong it could go or how well it could, you know, it could be, it could be. But, you know, at the very early stage, you're very much betting on people and the idea. When you reach the next stage, when the company and the idea has grown, then you start looking at financials. So obviously that's, you know, that's, I think, being comfortable in Excel, you know, and being capable of running some, you know, financial analysis is of, you know, is also key. And obviously from an investor standpoint, attractive value. There's tons of company out there. You cannot fund all of them. At least if you work for one fund, you know, you cannot fund all of those companies. So it needs to be an attractive value because you're still an investor. Even though you might like the company, you know, you might be close to the founding team, the value needs to make sense for you, because at the end of the day, you'll have, you know, you'll have return to give back to your investors. So I guess that's the last point.
For sure. I very much echo all of those points. I personally spend, almost all my time trying to get to the bottom of if it's the right founding team and how big the opportunity can be. So maybe just to summarize what I think you both said, I think the key takeaway for you guys listening would almost be that the earlier you go, the more qualitative the judgment is, and the later stage you go, and obviously you can be way later than Aniela too, because you're still relatively early in the whole value chain. The more quantitative it gets. I think that's a fair statement worth considering if you're looking to get into the industry, which part attracts you the most, and we're going to dive into that later. And we've also been kind of loosely mentioning like the concept of risk return. So I just wanted to kind of break that down by discussing a little bit what kind of return you look for in your investments. And I also just wanted to make clear to the audience, when you're investing as a venture capital investor, you're probably most likely working for a fund, and that fund in turn will have raised capital. And that means that a fund most typically puts together portfolio companies. So you have maybe 20, 25, 30 investments in one fund put together. So when we talk about the risk and return profile, you can, I guess, both think of it in terms of the risk and return that you're taking on each specific company, but also how that all blends together as a fund. I'm going to hand over to you, Aniela, to kick it off.
So I guess it's probably very different, well, a bit different from Hugo, because I'm investing in later stage. Most of the time, I'm taking less risk. So the companies I'm investing in, if everything goes well, are not supposed to fail at any time. They already found their market fit. They already have a certain amount of clients. Most of the time, they're already present in different geographies. So the chance for them to completely disappear is quite low. And when you have a lower risk, you have a lower return. So in Series B, C, the target return is normally, I guess, lower than earlier stages. So we would look at returns of about 3 times.
Exactly. Yeah. And for everyone listening, that's 3 times the money that you originally invested in the company, which if you've been listening to our other seminars, that's still going to sound very high in contrast to what you might expect in public markets or in credit investments and things like that. So still de-risked in the broad spectrum of venture, but still very high returning compared to some other types of investments. What about you, Hugo? What returns are you targeting?
Yeah, I'm actually 2 or 3 times your capital invested over, say, 10 years. It's a pretty solid return, I would say. Obviously, if you invest early stage, you're looking for something slightly higher than that. But I think I think Aniela has explained perfectly how we think about return, but I think one important point to mention, and that's where we're different than traditional private equity firm, for example, is that we invest, if you invest in industries like technology and stuff like that, you are probably looking at between 8 to 10 years before seeing your first cash flow, unless exception where there's a company that is being sold early stage, or company winding up, but you're looking at your return on a very long-term basis rather than looking at something on a yearly basis or 2 or 3 years. You're investing for a good minimum of 5 years, up to 8, 10 years if you go into like businesses that will generate revenue at a very late stage. I would call it like deep tech, for example, which is kind of like trendy at the minute. But I guess as a good investor, the first way of looking at it is like you have to cover your cost. You can model, you can predict return. You can say, okay, if my portfolio of X companies, one of them do super well, 3 of them fail, the rest of it, the belly of my portfolio just give me back 1X. I think what first you need to understand is, of the structure of the fund, how much you charge as what you call management fee, which is usually like 2% of the capital that is invested from your investors. And on top of that, you charge usually a performance fee, which usually is like a 20% performance fee on your performance, right? That you have crystallized. So after that, you kind of like know how much is left within that pot of what we call return. But in terms of the target return, I think I would agree with Aniela. 2-3x, meaning 2-3 times capital invested is pretty solid. But closer you go to how young the company is, higher those returns should be, but higher the number of failures also. So
yeah, sure. Yeah, it's a waiting game. I definitely echo what you just said. For us, we model or assume that about 50% of the companies are going to go completely bust or bankrupt, which for some people that don't have high risk appetite might seem incredibly scary. But then we hope that maybe 1 or 2, hopefully even 3, are going to be really, really big companies. That's why we're talking earlier about kind of the big market potential. We have to have some of these really, really large outlier outcomes to kind of return the rest of the capital of the fund. So we're probably also at a total fund level, we'd be very happy if the fund ended up at around 3 times all the capital that we invested, but we have to have some of these almost like 100 times investment outcome to kind of make that whole math work together. So quite some staggering numbers compared to some other parts of the investment industry, for sure. Maybe we'll switch gears a little bit because I want to pick your brains on kind of what you do on a day-to-day basis. What's it like being a venture capital investor? So maybe I'll hand over to you first, Aniela, to just talk a little bit about what you do on a day-to-day basis.
Sure. So I think it's a very good question. It's one of the reasons I really like my job, because every single week is different from the other ones. It really depends of where we are in terms of the fund and our investment rhythm. So there's a significant amount of my time that I spend sourcing, filtering companies. Huge amount of my time is spent speaking with founders, and that's one of the aspects I really, really appreciate and I feel lucky to be doing. Sourcing is also talking with other VCs, trying to figure out what's hot in the market at the moment, which companies are raising, what are the sectors you're diving into. Then once you found the company that you actually like, you start to build a conviction on it. So that's more time analyzing the company. So market, financials, the team, talking to their clients. There's so many things you can do to deep dive into a company. And then once you've built a conviction on the company, you need to get on board the whole team. So we have a system with the investment committee. So I need to present the company, present all the positive aspects, negative aspects, decide on how much do we want to actually pay for this company, making sure we actually make the return we want to make. So the three times I was mentioning before. And then at the end, if we finally decide to invest and we invest, so the company becomes a portfolio company. And then there's a whole other aspect of the job, which is a more long-term vision, which is following the company, accompanying them, finding business development access, opening doors to them, helping them in anything they would need, HR or whatever. And then at the end, there's another aspect, but that I haven't seen yet, which is actually exiting the company for the portfolio. So either through IPO or selling to a corporate.
Very interesting. Yeah, and as Hugo mentioned, that can obviously take quite a long time. So it's not weird that you haven't seen the full cycle yet. What about you, Hugo?
Yeah, I can't beat what Anila said. I mean, she has said everything, right? So, you know,
Start switching around.
you know, sourcing deals or directly receiving tech from the companies. So spending quite a bit of time on reviewing the deck, you know, the product, the idea, how they're forward thinking about how they want to take the company forward. You know, market analysis is also, I guess, very interesting. For example, from my background, you know, in the banking industry, you're slightly more siloed. In the VC industry, you can go out and look for any type of data, any type of information on the market. Something that is actually, you know, you would do it on the daily basis. Like, if you're lucky enough, for example, to, you know, I'm passionate about sports, right? But if you want to go and join a VC that invests in sports company, you would ask yourself question about, oh, actually, you know, Peloton came up with a new bike. Like, you know, let me do some research about how many people actually can buy a bike. Like, it's like a simple question, but that's actually super important for you to like decide if you want to invest in a company like that. So I think market analysis on top of the company analysis is very important and takes quite a bit of time. And I guess networking, but I think Anila touched base on that also. You know, meeting founders, meeting other VCs. It's a very highly advertised industry. Everyone know each other. Everything is on LinkedIn. Everything is on Twitter. You know, you have raised capital. You flag it everywhere. It's a highly advertised industry, more than banking, more than any other industry. So, you know, there's event. I mean, in London, you could go to events every day. It can be a talk. It can be a drink from a VC. It can be a company just, you know, raising capital and doing an event for that. So I think networking is, you know, is a great way of getting yourself into the industry. And that also take quite a bit of time. So yeah, I guess, you know, I've just taken some point from what I've said. So I'm cheating a little bit there.
I very much agree with that. I can definitely echo that. A big chunk of my work is very social, if you will, in many different aspects, both with the VC community, but also obviously with founders. And on that note, because we're talking about it, Hugo, I'm going to go with you first. What's the most important personality traits that you think you need to have to be a good venture investor?
Well, I mean, not trying to be funny, but you have to keep your cool. I mean, you know that quite a few of your company will just disappear. So, you know, you have to be ready for just seeing companies sinking just in front of you, and you'll feel terrible about it. But this is how the industry is, unfortunately. I guess at the very beginning, you need to be curious. You need to be intuitive. Again, you know, very large fund, like for example, AXA, they will receive tons of decks every day, right? So you have to be intuitive. You have to know, you can't work, you can't spend hours on all those single deck, right? So you have to somehow have some intuition about, okay, I like that company slightly better than the others that I've seen. They look alike, but I kind of like that one better, right? You need, I would say, to have some sort of forward thinking, not only on the math and not on the financial projection, but more on, actually, can that product in 10 years be there? Like, can that be a thing? Can that become a very large, you know, part of that economy? So you have to be like forward thinking. obviously comfortable with numbers, but I would say you don't need like a very quantitative background. You can be comfortable with numbers to a certain extent, and you'd be successful in venture capital. I guess at a later stage that become more problematic if you're not that comfortable, because you actually have to model, hard-coded numbers on, okay, how much I can make out of my investment. But very early stage is kind of like finger in the air. You say, I might get that. I'm not so sure, but that's one of the possibility of the outcome, right? And I guess you need to be decisive. It's hard to say no. It's very easy to say yes, because you would like, I would love to fund all the company where I'm like, actually, that's a very nice idea. But you have to be decisive, and you have to know that at the end of the day, you're putting your money into it, right? So you need to be confident and you need to be decisive. I guess, yeah, those personality trait, yeah.
Very much agree with that. Do you have anything to add, Aniela?
I think your answer is pretty complete, Hugo. I would just maybe emphasize on the fact that you need to be a people person, because there's a big amount of the time that you spend meeting people you never met before, founders, VCs, experts. Like every single week, I met people I never spoke to before and that I have zero contact with. So that's a very, very important aspect of the job. You were mentioning the drinks, that all the VC drinks and founders drinks. There are conferences also all over Europe. And you need to be someone that actually enjoys meeting people.
For sure. Yeah, I was also going to mention that. And maybe as a final point, I think you're in a really privileged position as a VC because you get to meet a lot of companies, but because we're also in the business of backing like that very, very tiny percentage of the very, very best companies out there, the very best founders, which could be defined in many different ways, but most typically they come from like a stellar background. They might have built something in this space before. They're going to be really, really difficult to get to. So they're kind of like the game reverses. They can actually pick and choose who their investors are. So in the most competitive of situations, you as a VC have to actually sell yourself too and explain like, why would you be the best investor? What are you going to do for the company? Like, why should they pick working with you? So there's definitely a very social aspect about the day-to-day, but also when it comes to actually like winning deals, which is super important, there's also a strong social element to that. Aniela, what would you say would be the most rewarding aspect of the job?
Well, 100% with no doubt, meeting amazing entrepreneurs every single week. They're most of the time way smarter than I am, and you see all the drive they have, the spark in their eye when they're talking about their company, which is basically their baby, their life. I think that's a very, very exciting aspect of my job.
Very much agree with that. Any different views, Hugo?
No, I would agree from a personal standpoint, meeting those amazing founders. From an investor standpoint, I guess, is having an exit. I think, at the end of the day, that's what we're looking for also, right? So, having an exit, one of your company ringing the bells in whichever stock exchange, or even sold to a company. From an investor standpoint, I guess that's the most rewarding aspect of the job. But as an individual, is meeting founders. That's the most interesting part of the job.
I very much agree with that. And Hugo, what would you say is the most challenging aspect of the job?
I guess it's, you can't be overconfident. If you're overconfident, you will end up investing in everything, and you will end up being very disappointed when the company just disappear. I think you have to realize that you cannot support all the companies, and to me as an angel, saying no is the hardest thing to do. I don't think from a modeling standpoint or just analysis standpoint, I don't think it's very challenging. If you love it, I think you will do it. You'll be capable of doing it. But I think the most challenging is, for me, it's at the personal level, just being capable of saying no, not being overconfident, and always keeping in mind that, it's you're investing in, in companies that, may become large, but some of them unfortunately won't succeed. So I guess for me, that's what's the most challenging.
Very interesting. What about you, Aniela?
Very much related to your answer, Hugo. I think the hardest part of the job for me is the part where you spend some time, some weeks meeting the founders, better understanding the market. You spend some time presenting internally the opportunity, getting excited about it, and then for a reason or another, because there's always a reason not to invest, you have to call the founder and actually explain that you're not going to be able to invest in their company. That's for me the hardest part. I'm still trying to deal with it.
For sure. And there's a lot of no's, right?
And there's a lot of no's.
There's a lot of no's, for sure. We have a few questions coming in. I'm going to save 2 for later because I think they're more kind of general VC stuff than the current discussion. But I think one is highly relevant to what we've been discussing now. And the question goes, how do you go about understanding deep tech businesses, which you don't have a background in? And I guess this is true for many. I mean, deep tech is such a good example because it's complex, it requires technical expertise, but there's, I mean, to be honest, this could be applicable to many different industries, right? Like most typically you are, as you said, Aniela, like the least knowledgeable person in a room about a subject, but you're talking with the specialists. So how do you go about that?
Do you want to start, Aniela?
Yeah, I mean, as you want.
Go ahead.
So I think first of all, you have the first step, which is talking with the founder. I mean, they're the best place to explain in which environment they're developing their company. So that's a first step. Then you dig into it. You talk to the clients. We do a lot of expert calls, which in just 30 minutes you get so much knowledge and you can ask all your easy questions. We also do deep dive analysis on specific markets. We did some on defense tech, cybersecurity. So yeah, so many ways.
I agree with that. Anything to add, Hugo?
Yeah, I would just not invest in something I don't understand. So,
yeah,
I guess that answered the question. I hope that all the VC people who invest in deep tech somehow understand deep tech, which is very different than tech from a engineering perspective. So as for myself, I wouldn't invest in deep tech if I don't understand it. I guess you try to be specific in the industry that you invest in. What you don't know is the product. I think you somehow know the industry. That's maybe why you're part of that team. But I think what's difficult is to understand the product because the product is very specific to what the founding team has as an idea about, okay, that's what I want to achieve commercially. I want to do it that way. I want the tech to look like that. So I would say that the deep tech, which is kind of like an industry, I hope for the people who invest in tech, they know about it, they understand it. I think the most difficult part of it is understand the product, the placement, how they're going to sell it, how they're going to address it, things like that. So, but yeah, I think Aniela is spot on. Speaking to the founders, reviewing the deck, doing analysis, trying to find comparables, company that exist that have been here for a bit longer than that specific company. That kind of helps you understand, the business a bit more.
For sure. I very much agree with that. And actually, we invest in quite technical businesses, but none of us have technical backgrounds. We've all spent quite a lot of time in this space, but one kind of way around it that we typically deploy is we have this network now of CEOs, companies that we've invested in, and we work super closely with them. A lot of them are also active angel investors, so private investors on their own. So we try to, a bit like what Aniela was saying too, we try to like almost bring in an expert, which could be a CEO in an adjacent field, to kind of like the due diligence discussions to try try our very best to vet the idea and the technology and everything around it. But it's definitely, for me personally, one of the hardest parts about the job, just the constant feeling that you're trying to get up to speed on a new industry that you're not necessarily familiar with, which is also, I think, long-term the most rewarding part, because you're constantly learning and you're constantly developing, and for sure it never gets boring, but sometimes it can be hard. Another question here, what is your internal IP that you've developed that allows you to be a good VC? I'm going to pass it over to you, Hugo.
Yeah, so I guess that question would be more from the company angle. So I guess IP is kind of like what the company own as like potential patents. Is that how I have to understand the question? I'm not so sure.
So I guess you could read it. I mean, I also first read it that way. I guess you could also say, you develop a personal IP, which is like your way of, being a good VC. I guess that could also be a different interpretation of it.
Yeah,
what's your
go ahead,
secret
Anita.
sauce?
I can go on if you want. I think I understood the question. I think because I have an entrepreneurial background, I try to always have a different approach, and I always try to put myself in their position, and when I'm talking about founders, of course. And I think this gives me a very different approach maybe than other VCs that have a more financial only background. I think that's definitely my touch, and I think it actually made the difference in the investments we made.
That's very important, for sure. All right. Well, I have a few remaining questions on that list, but in the interest of time, because I can see it ticking, I'm going to move over to a very important area, which is how you got into venture. And we start out obviously hearing your intro. So I know you both started off in kind of M&A, investment banking, trading, which is a very common route into the investment world. But do you guys just want to have a stab on kind of like what some common career paths are that can ultimately get you into the venture world, and some advice that you would have for students that are super interested in getting into VC and they don't know what to do immediately after university?
Sure, I can start with that. I mean, I think you have two people this evening with you that have a finance, very, kind of somehow a strong finance background. So I'm not sure we're the best people to argue that finance finance shouldn't be the only way of getting yourself into VC. I've met few people who currently work in great venture capital funds who never worked in a bank before. They come purely from a corporate. They have a corporate background. They can be ex-founders. They can be commercial people. You can see a variety of people and background. I personally got into it by becoming an angel investor, and I think that's kind of like a great way of starting to get into the industry, because you as an angel will meet founders. You can invest your own capital if you want to, but even if you don't, you can take part of discussions and pitch session. But as a background in terms of education, having financial background in terms of taking classes in finance, accounting, things like that will help, and understanding the numbers. But if you don't have that, I think you can still break into the VC industry. You don't need extensive experience into the banking industry. At least that's what I think. But I'm not sure I'm the best person to say that. But I've met great people who are currently VC investors, and they have never worked in a bank before, and they work for corporates, and they just ended up in a VC fund because they just thought it's a great career path to have. So I would start by getting involved as an individual into the industry, and then if that's something you like, then I think you can give it a shot.
For sure. Yeah, and I think we're definitely in overrepresentation in this call of kind of like a traditional finance background route into getting into VC. I think maybe Europe, if you take kind of like a much higher level approach, I think Europe has been lagging a little bit the US when it comes to just having entrepreneurs joining the venture industry. And I think you and Aniela touched on this too. If you're a founder, there's a lot of merit in having a VC investor that actually has been on your side of the table. They've founded a company, they've raised the money, they know exactly what you're going through, so that when you pick your investors, they can actually provide that kind of real life experience and support when it comes to building and scaling the company. So I think even though kind of like the most common route historically, maybe in Europe at least, has been through more traditional finance jobs or consulting jobs, I think it's definitely shifting a little bit. And I would personally, I had this discussion with someone not too far back, say that, you know, joining kind of high growth startup would almost be an equally as interesting route into VC investing these days. We've gotten a few more questions. One that's kind of adjacent to this one. The question is, what is the typical background you need to work in VC? I think we just kind of touched a little bit on that. But also, is it possible to secure entry-level roles and VC and young advice for young grads looking to do that?
Do you want to take it, Aniela, or?
Sure. I think we mentioned part of the answers of the typical background. It can be investment banking, strategic consulting. Definitely a plus to have worked in a company, in a startup that is backed by a VC. I think any things in your CV or during the interview that can show that you have a true interest in tech. I don't know, assisting to conferences, being part of assisting to these conferences, for example, is definitely a plus. We want to make sure you're curious and you actually like the tech world.
For sure. And when it comes to entry-level roles in VC, I wouldn't say it's super common, but they certainly do exist. My personal recommendation there is, Gain obviously works with a number of VCs, many of which I would say wouldn't actually otherwise do an internship program, because a lot of VCs tend to be smaller organizations that maybe don't have the kind of personnel capabilities to do large internship programs. So definitely keep looking Gain's direction for that. We also have a jobs board where companies can post jobs, and I know from time to time there's definitely been grad roles in VC there. And my other suggestion would be to, like, you know, just research VCs in kind of the city that you want to work with, and try to build relationships with those people. You know, you can not get much more than a no on LinkedIn if you reach out to someone and say that you're super interested. That's a really nice kind of organic way to getting to know someone. And maybe if it ends up being that, you know, they're not accepting graduates, then you're still one step ahead for the future and you can maintain that contact. So that would be my suggestion too. All right. I think we've covered quite a lot of ground on how to get into VC. Maybe a last question would be, how did this might not be applicable to Hugo, by the way, because you kind of founded your own, or you got into angel investing yourself and then founded your own fund. But for you, Aniela, how did the recruitment process look like, and
Sure.
how does it look for other people that you hire?
So I think investment funds and VC funds as well are most of the time small teams. So there's a big importance in put on the fit with the people we meet during the interviews. We want to make sure you fit with the culture of the fund. We want to make sure it's nice to work with you, it's fun. So that's a very important aspect. And I would recommend, if you're having interviews in funds, to keep that in mind. Do you actually want to sit every single day in front of this person? Because the week is long, it can be long. So that's an important part. And So yeah, lots of feats. You will meet, most of the time you will meet all the investment team. And also, I think 100% of the time you will have a case study, and the case study will be a pitch deck of a company, and they will ask you to give your opinion on this company and to say whether you would like to invest in it or not.
For sure. I think that's a very, very, very common key important part of the recruitment process, for sure. And you can start getting, thinking on those things, in your everyday life. Like, you can just imagine something that you see in front of you. It could be like a consumer business that you use every day, like, a chain of restaurants or a mobile application on your app. You can start, forming a view of whether you think that's a good business or not. So it's never too late to do that. We have one quite specific question. Thank you for sharing your experiences. I'm Enki, an undergraduate student from UCL, and I have prior BC experience at Y Combinator, which, for those listening in, is one of the most famous and large accelerator programs over in the US. So amazing job on landing that, during which I found it hard to establish a framework of understanding of a startup project, such as product market fit in consumption industries. Do you have any suggestions on how to sharpen this ability? And maybe we'll answer this a bit more broadly rather than just focusing on product market fit, which is obviously an important part of your assessment. Maybe just we'll answer it more broadly, like how to hone your capabilities of analyzing companies. Do you want to go first on that, Hugo?
Sure. Well, I guess first of all, if you're looking at a company where which is building a product which is completely new, I guess you can forget about the framework, because you will kind of like have to build it from scratch, right? But from the bottom to the top, you kind of try to understand. If I had to give a framework, target customer, who are the customer for that specific product, and then you look at the underserved needs, right? How that product basically will bridge the gap in the current offering, and then you basically I would say you value the I call it the value proposition, actually. And between that value proposition and the needs and the target customer, that's kind of like where you can find your product market fit. So that will be between the value proposition and kind of like the target customer and what the company is building. I'm not sure there's a one framework that you can follow for each of the companies. I would say no, there's not. But if you look at it from primary standpoint, you start at the very bottom, target customer, how the product is built, etc. How can you bridge the gap with current offering if it's an existing product, and then you find your value proposition, and then you kind of like in between somehow can get the right product market fit. But it's not something easy to figure out. Even founders who have the idea, they know what they want to build. Usually for tech companies, for example, the biggest problem that I personally see is product market fit. They know the tech, they're brilliant engineer from the best school, but for them figuring out the product market fit is very difficult. So I'm not sure there's a framework, but you can follow a process to end up somehow guessing the right market fit for the product. So it's a difficult question, actually, because I'm not sure there's a framework you can just apply to all the companies.
Yeah, for sure. And definitely, as you mentioned, in kind of our stage of investing, we're not expecting companies to have found product market fit. But on the other hand, when Aniela invests, I do think companies have to have found product market fit. So do you have any thoughts on that?
Well, that's true that the companies I invest in, most of the time, they already have certain amount of clients, certain amount of revenue. So we don't ask ourselves a lot these questions, but we still make sure we're actually, like, the company is actually solving a pain point, and that the other alternatives that exist are not as interesting as the product they're putting on the market. So we don't spend lots of time on it, but we still check the different boxes and make sure it's the case.
For sure. Cool. I'm looking at the time, and we have about 5 minutes left. I want to leave a little bit for questions too. So if you have any questions now that you haven't asked already, please pop them into the chat. But in the meantime, I wanted to just cover 2 quick areas. One, which is, I love to do this with any kind of investment talk, which is myth busting in general. And then I wanted to leave you guys with some final tips and tricks too. But maybe on the myth busting side of things, a question for each of you. What was something about your perception of the industry before you went into it that you were completely wrong about?
I will start on this one. So I had previous experience in investment banking and had a private equity experience. So I really thought it would be similar worlds in the way it works, and actually it's not at all. It's completely different. I would say one of the differences is that as a junior, you're much more exposed from day one. You're on the calls with the founders, you actually meet them, you have much more independence, but also responsibilities. So that's really something I appreciate. There are also much more interactions between investments, between funds, between VCs, which is not the case in private equity fund. There's not that much exchange of knowledge in private equity. Yeah, I would say those were my most surprising aspects.
That's a great one. I definitely echo that. What about you, Hugo? Any surprises since you joined the industry?
I mean, I guess as a founder, it's slightly different, but I guess if I compare it to my previous experience in banking, banking gives you the vibe of very strict industry, right? It's it's very strict. There's processes. You fit within a certain way of doing business, right? When you start getting involved in the VC industry, and I think I mentioned that previously, it's highly advertised. I mean, if you start following few funds, if you start following few companies, you have to you can see that it's an industry where you have to make noise, where you have to advert what you do when you have raised capital, when you as a fund you invest into a company. So I think obviously keeping the fun also out of the job is important. It's a fun industry because you're literally investing in companies that could become futuristic, and they can become very large company. But I think at the end of the day, the job also require to be organized, to be kind of like strict about your process. So I don't know if it's a misconception, but if you look at it, if you're not working in the VC industry and you just read about it and you get involved, you can see that it looks fun. Like they have raised X million, they're doing that. That fund has invested in that, and you can see, I mean, all those companies out there that they're really good companies, and the product are just I mean, if you love it, I mean, the product are fun in whichever industry you invest. If you invest in tech, in retail, in sports, in anything, right? In education, for example, if you just look at it from reading articles, it's a very fun industry, but you have also to realize that it's a lot of work, and it requires a lot of time. So it's not as strict as banking. It's not as siloed, but it's it's still, I think, don't think that it's just I have some capital here and there, and there'll be some company out there and I just distribute my cash. It's still very much a job that require to be organized and patient and passionate about, I guess. So not sure if it's a misconception, but yeah.
Important considerations for sure. Yeah, I think the long-term aspect of the job, especially as you join maybe when you're a bit more junior, is a really important one. For me, I thought I had a long investment horizon in my prior investing role, but this is really such a long-term game, and developing all the capabilities that we spoke about, like being an incredibly networked person, incredibly knowledgeable about a sector, and having that kind of ability to win the best deals, that really takes a lot of time. And then once you've actually done the investments, it takes a very long time before you find out if they're good or not. So you really have to be a patient individual to do this in. Amazing. Well, we haven't got any more questions in case anyone has any, ask now. Otherwise, I just wanted to ask you for your final tips and tricks. We've spoken a little bit about kind of routes to get into the industry, but if there's anything else that you would like to share, piece of advice, your favorite podcast, book, or whatever it might be, now's the opportunity.
Maybe advice. I think when you're trying to figure out what direction you want to take, what kind of job you want to choose, spend as much time as you can talking with people. Talk with friends, with families, network. Don't be shy. Ask all the questions you might have. And I think this will help you figure out if that's the right job or not for you.
Very much agree with that. Hugo, any final words?
Yeah, I mean, it's an industry where you can get involved at a very early stage as an individual. You don't need to wait to join a company to be involved. You can be an angel investor. If you're lucky enough, your university, for example, can have an incubator or like an accelerator. So you can join that, you can take part of that. So that's kind of like what you don't have in banking, until you join a bank or a financial institution. You kind of like have to read online and things like that, but it's difficult to get involved. VC, any individual can get involved, at least from just learning about the industry. And I think that's kind of like the difference between VC and the rest of the financial industry. So if you like it, just get involved as an individual. There's tons of group out there where you can meet founders, you can meet investors, you can go to conference, and it's easier to access those than access any other event that are more related to the financial services industry. So that's kind of like my advice. And then at uni, I'm sure there's a group of angel investors or people who are just interested into looking at startups. So get involved early stage.
For sure. And as Hugo mentioned, VCs like to kind of spread the word about what they're doing. So in contrast to a lot of other investing worlds too, which is quite closed, I think by following the right people on, Twitter or LinkedIn, you can find out a lot of incredibly valuable information about how they're thinking, which I think is a very good way to start. Amazing, guys. I loved having this discussion. Thank you so much, Aniela and Hugo, again for joining me. Loved chatting with you both. And once again, just wanted to reiterate to the audience too, if you want to connect separately and have any questions that you didn't get a chance to discuss on this call, I'm super happy for you guys to just reach out on LinkedIn and we can continue the chat there. And with that, I think I'm going to hand over to Vicky.
Just want to say thank you to everyone who's here, and thank you, huge thank you to Caroline and Aniela and Hugo for sharing like their experience, and there's been some really good questions, and we're just really grateful to you. Thank you very much. It was a great conversation. To everyone that's here, we're nearing the tail end of our spring program, so do see what's coming up. I think we've got 2 more events that aren't already sort of full, so have a look on our website, www.gainuk.org, and we're on social media. We're on Twitter @ourinvestors and on Instagram as Girls Are Investors. So see what's coming up. We've got 2 more weeks, I think, of things coming up that you can attend, so we'd love to see you there. Thank you again to our speakers, and hopefully see you all again soon on a different event. Have a good evening, everyone.
Thank you, everyone.
Thank you so much.
Thank you so much, everyone, and great to meet you again. Thank you so much for taking part of it.
Bye. Thank you, Caroline.
Bye.
Thank you, Aniela. Bye. Thank you, Vicky. Bye.